What is up, guys? Hope we're all surviving the bloodbath. So today I just want to talk about why Bitcoin has been doing what it's been doing, why it's crashed, why this whole maneuver has been going on the last month. So there's two main reasons why, and I'm just going to get straight into them. Try to keep this as short as possible. Let's check it out. We have two main aspects of the markets. You get fundamental and technical. Now, there are some fundamental reasons and there are some technical reasons. These are just things that I've come across and thought about myself. It's not financial advice. I'm just a dude who loves cryptocurrencies and helping people. And I've been doing it full time and pretty much have made it my life. Reason one: Chinese New Year. Mosh mosh. Oh wait, that's Japanese. You're probably thinking, what? The Chinese New Year? Well, the Chinese New Year is the biggest migration of people on the planet. There are 3.3 billion people that will be leaving between now and February the 16th. Now, if you think about holiday time, what are you going to do? If you're a trader, you're going to draw your money because you have a load of expenses. You have to pay for travel costs. Either you're flying, you're catching the train, or you're going by ship. Well, that's how the Chinese people do it anyway. That alone is enough money, 3.3 billion times the price of a plane ticket. So the thing is, massive part of the crypto community are Asian, right? And when you're pulling out that amount of money for plane flights, for trains, for all sorts of travel costs, you're also paying for holiday costs. Think about when you need to go on holiday, you need spending money, you want to take gifts to your loved ones, maybe you've got a girlfriend, your family, whatever it is. Another thing in China is huge, as you know, is they have absolutely incredible fireworks. Fireworks are super expensive, especially that kind of fireworks. So that's the first reason, Chinese New Year, right? And just to show you, I just Googled it, and that's from 2016. Apparently it's going to be even more this year. So you can check that out. Here's a heat map of all the flights, I think, or all the people just migrating around. That alone justifies a big portion of this. Another thing is the majority of traders in cryptocurrency are retail traders, right? Meaning not registered professional traders or stockbrokers. We are everyday guys who go on holiday, who have families. Not to say professionals don't, but professionals have rules and laws that they have to abide by. It's a lot more rigid. So that's number two. Then number three, tax returns. Our favorite word, and it's my absolute favorite word, is tax. I absolutely love giving away like 60% of my time to the government. It's the best. The end of the tax year in USA this year is on March the 15th. Now, when it's tax year, people want to draw money to do their tax. They want to, do all sorts of things to minimize their tax. Obviously, you don't just do it the day before. There's a lot of paperwork that's involved and stuff. So that's another reason. So now we've got America and China who have huge reasons for pulling out money, and they make up a huge, about 50% or more of, don't quote me on that, it's just my estimate. Okay, so those are the fundamental reasons. Now, technical reasons. By the way, fundamentals is basically just measuring an asset or cryptocurrency where you look at qualitative and quantitative aspects, right? So that's anything that's intrinsic, tangible value. So basically looking at the team behind a crypto, the technology behind a crypto, the competitive advantage behind a crypto, all these sorts of things, and news events, all of that influences it. What are the updates happening? What's happening in the company? That's fundamental, just to give you the quick one. Cool. So then you get the technical reasons, right? Technical reasons is basically, it's to do with charting, analyzing price, analyzing the behavior of other traders based on patterns and indicators. So I'm just going to use a very few simple indicators to just show you other reasons why Bitcoin has been crashing the way it has. I'm actually doing this at a very, I feel like I'm living life on the edge here, because it's very close to bouncing and there's things happening, but I just have to get this video out to you guys. First is trend lines. So just move that baby. So trend lines basically just connect two or more price points. When price touches a trend line twice, it means that the trend is established, and when it touches the third time, which was almost there, it means that it's confirmed. So is the price of Bitcoin going up in a trend, or is it going down in a trend? That's basically what these lines measure, and you just measure them by connecting the price patterns. Okay, so there's one trend line. It's all good. Another trend line. Okay, there's a few more in here, but I'm just going to draw those. So the first sign of weakness of a trend generally is when the trend line breaks, right? So let me just clean that up a little bit. So you can see the trend line broke over here. Yes, it did go up, but it didn't stay up. So let me just draw that. It broke over there, below resistance, below the trend line, then popped back up, tested support, and broke down under support again. Then price broke this trend line. So strike two. The longer the trend line, the more power it holds behind it, the more strength, the more accurate, the more weight that it holds. So this trend line was since the 12th of December, which is just over a month long. That got broken over here. And then this trend line also got broken, which was just a bit shorter than that. It was about a month ago. That broke there, strike two. So that's the trend line story. There's another trend line here, which broke. So keep this video as short as possible. And all other, well, let's say not all other, but 80% of other traders are looking for these things. So they see it breaks, their price is going down. Because it's going down, they're going to act accordingly. And then it happens again and again. So, these are technical reasons why Bitcoin has been doing what it has. That to me is very I'm kind of expecting this to happen. It's plain and simple right there. Trend got up, it was trending upwards, it broke. Trending upwards, it broke again and broke again and broke again. Right, so the next thing is what we call a descending triangle. Now this is a bilateral pattern. Patterns are just basically things that repeat themselves over and over in charts, and they determine what the price will be doing, or what is probable for the price to be doing. Nothing is absolute in trading. So as you can see here, this triangle was only confirmed really when Bitcoin dumped here. It broke that trend line that I drew earlier. So here we go. It established this descending triangle. And the descending triangles can go either way. They're bilateral patterns. So it could have either done this, and it still can do that, or it can do that, or it can go straight up, straight down. There's a whole bunch of things that it can do. But in this case, because of all of these things because of the trend lines being broken, because of price doing what it's been doing, and because of other reasons, which I will show you shortly, this is, to me, leaning more on the side of going down. And we did. Here we go. We went down, we broke that. It didn't hold, but we broke it once, twice, 3 times basically. We went back up now, and there's a good chance of it bouncing pretty soon, which I'm very excited for. And that's good for us guys. When that happens, you're going to be a lot happier than you are now. There's also Fibonacci retracements, which are, I'm not going to get into it now. I'll do a video with all technical stuff later, or a series of videos. It's basically the golden ratio. I'm sure you've heard of that. It basically is just a ratio that repeats itself all around life, and you can see it in DNA, in animals, in sea life, in the stars, everywhere. And for cryptocurrencies, it's an excellent tool. I cannot tell you. It's basically a tool that just maps out this ratio on price, and I've backtested it like to hell and back. I'm not by no means an expert trader, but I've dedicated myself. I've actually fallen completely in love with trading since May last year, and since then I've just been backtesting strategies, learning them and implementing them, getting experience. I'm still got a lot to learn, and I'm creating this channel to document what I am learning to all of you guys. So this I've tested over and over and over again, and it proves 99.9% of the time to hit the fib lines on the mark. And I'll prove it to you guys right now. So as you can see, that fib line lines up almost exactly to where price is, exactly where the triangle was formed. So when two more indicators overlap like that, they both point to the same thing. That's what you call confluence. And obviously the more indicators, I think of them as strength points. It's just the way I'm building my plan. The more strength points something has, the more probable it is to go in one direction. So we have one strength point, and because it hit this line, because it hit the fib, it makes it so much more powerful. It makes my hypothesis that much more probable. So if I draw that on this as well, you can see where the price hit the trend line, same here, the 0.5 and that trend line, and here we are again. So right now, sitting on this bleeding edge of that 0.6. So if you break that, if you break 12,000, in my opinion, there's a good chance we're going to go up. If you break it with more volume, that's my indicator. Then the other thing that I've noticed is the stochastic RSI. Again, another technical thing which I'm not going to look at, or I'm not going to go into detail with. Basically just oscillates with momentum of the price. As you can see here, basically how I use this and how I've been taught to use this is every time the blue line crosses under the orange line, the K line under the D line, just so you know what they are, price will reverse and Bitcoin will go down. Every time it crosses up, it goes up. So just to prove this to you, I'm not going to show you all of them because it's going to take a while. Here we go. The K line crossed under the D line, we went down. Crossed up, we went up. Crossed down, we went down. You see that? And it goes back, I mean, years, guys. It's such a good indicator. This only on the 1 week time frame, by the way. Just every single one of these candles equals a week. That's all it means. So I'm just going to measure how long it took Bitcoin to get up X%, and how it sped up. So think about it like this. So imagine you run a marathon. The next day, you run another marathon. The next day, you run an even bigger marathon. The longer you do that and push yourself, the harder you're going to get hospitalized. And if you keep on doing that for 2 weeks, you might even die. It's just a way to look at it. If you cycle and then you rest for a week, cycle and you rest for a few days, that's kind of what this is like, cycling, running, rest, running, resting, running, resting. That's why I love the word correction, because you're correcting the force it took to go up, you're correcting it. The force you exerted, you're giving your body, or the market's giving itself time to correct and to recover before it can build up energy to go up again. So remember what I said now, and based on that, I'm going to show you why this is important. That one. One. Boom. Maybe you can already start to see what's happening here before I even open my mouth. So I'm just going to round these off. Bitcoin took, this is the weekly, so we're measuring weeks here. 300 days to go up 360%. 200 days to go up 100%. 56 days to go up 80%. 77 days to go up 230%. 42 days to go up 167%. 35 days to go up 112%. And then 28 days to go up 300% or 230%. So if I had to narrow down, it could be more accurate if I had to narrow it down per daily, but you can see just by these boxes, they go from long and short, so meaning long time period and smaller gain, and it keeps getting smaller and shorter, 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 and then it just explodes. And that's what you call a parabolic movement. And when market goes parabolic, it's going up way too hard. You've now run a marathon every day for a month, and you've cycled and you've done boxing and backflips, and you are just finished. There's no way possible you can carry on doing what you're doing. And then this happens. Boom. Your body crashes. The market's body crashes. No more, guys. I need to rest now. And they call it parabolic because it forms that kind of shape, if you see here. Parabola, it's like you learn it in science in school. It's like a little cup, like a beaker. That's a parabola. Now, as you can see, that follows that price. So there's another reason, guys. And then the last reason is that this has happened before, right? So 2017, look what happened. First month of the year, this is what happened. Boom. And I didn't know this, guys, because I only got into crypto, like around here. But I know, as I said, I've been dedicating my life to it, and I'm obsessed with it. Then 2016, boom, look what happened. Same thing happened 2015, actually. Yeah, you didn't have the initial bull run, but it still dumped at that time. People capitulated at that time. Because they capitulated, they gave up. They had way too many losses, but also they needed money for all the fundamental reasons that I pointed out. So guys, yeah, this is basically all I wanted to show you. That these are reasons why Bitcoin has been doing what it's been doing. It's not a scam. It's not over. It's not like the bubble has burst, man. It's not none of that crap. Bitcoin is incredible. Completely drinking its Kool-Aid. Yes, we may retrace, and I think down to 8K is a nice resistance zone, nice support zone, sorry. But I think we'll go down here. There's possibility to go down lower. There's also possibility to bounce right now, like it may be going down right now. But I'm still doing this video for you guys. Dedication, hey, better subscribe that shit, yeah. Just joking. Those are probably not all the reasons. There's also talk about manipulation, by whales, and that's a whole nother ball game. I'm not going to go into conspiracy theories now. Chinese New Year, the end of the tax year. Crypto traders are retail traders, so we're everyday folk that want to draw money and spend it around this time of year. And then all the technical analysis that I explained. I hope it wasn't too technical, and I know for a lot of you guys watching, this is really easy stuff for you. Thanks for bearing with me. I'm trying to explain it in an easy way so anyone can understand. I hope it helped you. Cheers, guys.